From the floor of the CME, I'm Jill Malandrino for the Streets Options Profits with Alan Knuckman of Trading Advantage. We've seen a lot of movement in the dollar and gold actually not going the way we expected from the last time we spoke. Let's talk about the movement in the dollar.
Well, gold is stalled out, but what we've seen more importantly in the dollar is pushing down. It's below 81 right now. The highs in July, the 2.5-year high was at near 85. So that was a sign that possibly gold could be putting in a bottom. I'm so confident that that's the case, and right now we're right around the 1300 level in gold trading sideways.
So how would you trade that? Because we spoke about a December 1350 position a couple weeks ago. Are you still sticking with that position, or do we adjust here?
Well, that position did double, so then mathematically it makes good sense, or it made good sense to take off half the position, and now you're trading for free theoretically. Now in the big picture, I'm looking for gold to go higher. I think it's going to go back about 1400. We did get to 1350. That was the initial target. It traded sideways for 3 weeks and then it targeted 1350. So it got there. It's taking a pause, but I'm really keeping an eye on this 1300 level. That's an important technical pivot level because that was a breakout 2 Mondays ago. So we want to make sure that it closes above that on a weekly basis. But I think this new dollar decline here is really adding. But I think the play is not in gold now. I think it's in GDX. I think it's in the miners. Now the miners have had more of a decline than gold itself. They doubled the decline, so they have more upside when it does turn around.
Well, I like trading in the GDX rather than picking one particular company because there's so much risk in each individual name. So at least you could diversify should one company either do fantastically well or poor because there's so much of that political risk and that social risk as well.
And the option play on this, you've got the diversification, you don't have the individual stock risk. The GDX option plays, you can buy the 20 call, which is in the money. We're trading about 25.25 right now. You can buy the 20 call for March. It's got 7.5 months of time, and the break-even's only about $1.25 higher. So it puts you in position for long-term success. Now you got to understand that the GDX hasn't been down to 20 since 2008. So you're looking to find a bottom here, and you've got a gentle way to do it with an in-the-money call.
Okay, great. Thank you, Alan.
For more of Jill Malandrino's plays for trading spikes in market activity, visit optionsprofits.com.